There's one DeFi yield farm that has never failed to disappoint me for providing liquidity. That is, of course, GMX, a decentralized perpetual exchange. GMX is a fairly interesting platform because you can actually trade cryptocurrency perpetuals without having to go on a centralized exchange. That means that you can easily long and short an asset, execute a simple swap, or of course execute limit orders through a decentralized exchange. Now, to put that in perspective, if you go to most decentralized exchanges like Uniswap or something like that, you can only swap one asset for another asset. That could be an ERC20 token for an ERC20 token. Whereas with GMX, what you can do is you can execute a short position to make money when the asset goes down. You can execute a long position if you plan on trading. Or of course, you can simply execute a swap. The other benefit is you can do these at specified prices. Therefore, your order is executed at a specific price. So say I want to swap Ethereum for USDC when Ethereum is at, let's just say, $2,100. Well, I can automatically have it swap my one Ethereum for USDC when Ethereum's at $2,100. Overall, GMX is just an awesome exchange. It's currently ranked number 17 by DeFi projects of market cap. So as you can see, GMX currently has a market cap of about $708 million, and the overall DeFi market's worth about $50 billion. But if we go ahead and take a look at the derivative category on DeFi Llama, GMX comes in at number 1 because it is the largest decentralized derivative perpetual market. And right under GMX is DYDX. We have Gains Network, Apollo X, and so on and so forth. So what I'm saying here is GMX is basically the Uniswap of decentralized perpetual markets. Obviously, it's not nearly as big as Uniswap, but it completely dominates the decentralized derivative market. So how exactly can you make money here? Well, of course, just like Uniswap, you got to provide liquidity to make money, and if there's no liquidity, then people can't execute trades. And as always, the more liquidity in a protocol, the better, because that means that slippage is going to be next to nothing. Now, first things first, I want to mention GMX is on the Arbitrum network and the Avalanche network, meaning that you're not going to have to pay high gas fees to get into one of these positions. On both networks, they have something called GLP, and GLP is essentially a liquidity asset that is backed by blue chip cryptocurrencies and stablecoins. So instead of choosing the assets you're providing liquidity for like you would on Uniswap, you actually can just provide liquidity for the overall basket of assets, which is Ethereum, Wrap Bitcoin, Chainlink, Uni, USDC, USDT, DAI, and Frax. So to put it simple, GLP is mainly composed of Ethereum, Wrap Bitcoin, and stablecoins. So with that being said, if Ethereum and Wrap Bitcoin go up in price, then GLP is most likely going to be going up in price. Same thing goes vice versa if they go down in price. One thing I want to go and mention is GLP does absorb traders' wins because it is the counterparty to all trades. So with that being said, if a trader wins $100 on their trade, then $100 is being taken out of the GLP composition, which ultimately sends the GLP price down. However, same thing goes vice versa. If a trader loses $100 on the trade, then the price of GLP is going to go up because $100 is added to the liquidity of GLP. So with that being said, there's two things that affect the price of GLP. Number one is just the assets moving in value. That could be Bitcoin and Ethereum going up or down. Number two is when traders win or lose their trades, that ultimately sends the price of GLP moving as well. So let's talk about where the money comes into play. Providing liquidity for GLP is going to allow you to collect fees made on the GMX platform. So if you head over to the trade section on GMX, you're going to see that there are fees. So for example, if I want to just swap one Ethereum for USDC, I am going to pay $4.37 in fees. Those fees go to the people that are providing liquidity for GLP as well as people that are staking GMX. Currently on the Arbitrum network, the fees are doing about 22% annualized, and on the Avalanche network, fees are doing about 15% annualized. And I will say these numbers are relatively accurate. They are based off of the 7-day average though. So that means that if there's a ton of people trading and paying fees on one specific week, then the APR is going to be higher. Whereas if there's nobody trading at all or barely any volume and barely any fees, then the APR is going to be lower. And the reason why I love GMX so much is because you can essentially earn 22% annualized on Ethereum, Bitcoin, Chainlink, Uni, and stablecoins, which ultimately is a really, really good yield considering that this is 100% real yield. Obviously, the risk is you're acting as the counterparty to traders. Now, obviously, some of you are probably worried about being the counterparty to traders' profit loss. So if we take a look at the historical data of GLP, you could see that traders are mostly losing their trades. The overall profit loss for traders is negative $10 million basically, which ultimately means that traders are losing more trades than they are winning, which obviously is really good for liquidity providers. But if you take a look at that data recently, ever since the beginning of 2023, traders have been winning more and more trades, which ultimately means if you do enter right now, you do need to worry about the risk of traders winning too many trades because you are the counterparty. Now, the reason why traders are winning more trades is because in a bull market, or at least a miniature bull market like we're currently in, it's easy to make money trading, whereas in a bear market, it's a lot harder and traders usually tend to lose more trades. With that being said, you don't have to worry too much because you're also making money when the underlying assets go up in price, which is the case in a bull market usually, as well as you're making money from the fees that these traders are paying. When traders are winning their trades, they're going to be trading more often, which means that they're going to be paying more fees, ultimately giving you a good stream of revenue that should hopefully outweigh when traders win their trades. Now, before we go any further, I'm going to drop my DeFi strategy report down below in the description. It's completely free for you to access. All you got to do is enter your name and email so I can send it over. This strategy report is basically just going to go over how I find DeFi projects and how I find good opportunities like this GMX opportunity. But to hop back into it, I want to talk about my position in GMX and GLP liquidity providing. So I'm actually not directly invested into GMX. Instead, I'm taking a leveraged GLP position, which ultimately amplifies my gains and losses from price action, but also amplifies the return that I'm getting in yield. So there's a few different platforms that you can do this on. Number one is Jones DAO, number two is Tenderfi, and number three is Steadify. Now, I initially invested about $24.34 in Jones DAO. Currently, that's worth about $26.53, and this is an auto compounding position. I've made about $185 from price and then another $185 from yield, ultimately putting me at a $375 profit. But the thing is, since Jones DAO is a leveraged GLP position, I'm getting about 35% annualized compared to the 20% or so that GMX is paying out. Now, over at Tenderfi, this is a more recent position that I opened. I invested about $1,500. It's currently worth about $1,550, made about $17 from price and about $30 from yield. And that's currently doing around a 30% APY, although I will say this is on the lower end. I do not have much data because I just recently entered this position. Because this APY right here is manually calculated based on how much I've made so far from the position. So this is the realistic APY, I'd say. It's just if you don't have a lot of data, it's not going to calculate it right. And then of course with Steadify, this is the position that I opened most recently. I initially deposited about $1,000. It's currently worth about $1,015. Made about $5 from price, $10 from yield, ultimately giving me a 15% yield. And once again, I don't have too much data at all on the Steadify position, so only time will tell how it actually performs. And by the way, this spreadsheet is available in my free Discord server where I post all my portfolio updates and actually share my portfolio live with you guys. The link for the free Discord can be found down below in the description. Make sure to join up and don't miss out. Overall, I'm pretty bullish on the decentralized derivative market simply due to the fact that not a lot of people want to go on centralized exchanges right now. However, a lot of people still want to execute leverage trades and still want to be able to short and long assets with ease. And that's what GMX as well as all these other derivative platforms allow for. If you guys enjoyed today's video, make sure to drop a like as well as subscribe when notifications turned on so you never miss out on a single video. Once again, download that free DeFi strategy report, join up on the free Discord so you're not missing out on anything, and I'll see you guys in the next one. Peace out.